What is up, traders? Today I'm going to be showing you a stupid simple trading strategy with just 2 steps to it that shows up every single day. What we're going to be using is the volume profile, and we're just going to be using one individual session volume profile to get a better understanding of where and when to trade. So let's dive into this. If you guys are excited, hit that like button, hit that subscribe button. We're going to be doing a shorter one as it is a stupid simple strategy. So let's dive right into the screens and break this down. So the volume profile is a great tool. It's a fantastic tool for day trading futures, but I think many traders overcomplicate things, right? There are only 2 steps to this trading strategy that I'm going to be talking about today, and we're going to be using just one individual volume profile. On a general basis, right, a wise trader once told me there are much less opportunities at any given day, let alone looking for 10s and 15s of trade opportunities every single day. So naturally, this is depending on your trading style and your expectations of the market. But overall, we can use just one simple tool with 2 steps to identify what's going on and where to trade. When I look at the volume profile, the first thing that I want to think of is where are the balances on the overnight session. Now, it doesn't necessarily matter if I'm trading the overnight or if I'm trading the RTH. I'm going to be using the prior session to the session that I'm trading. For instance, if I'm trading the RTH, I'm going to be using the prior session ETH session, which is going to be this kind of grayed out blue area, and then the RTH is the darker blue area. So whichever I'm trading, I'm going to be using the prior to determine what is going on. I'm just looking at 2 things when I talk about this simple trading strategy. Where are the balances on the prior session, and what are the shapes of those profiles? Those 2 questions, right, if we got answers to those, that's where I can expect where to trade and expect heavy-handed market participants to show up based on the most immediate price action of the prior session. Since we're looking for trade possibilities every single day, I'm going to be focusing on a session-by-session profile, as well as throwing in the weekly cumulative profile here and there to give us a closer look of what's going on. But we don't necessarily need that. This goes further than just looking at value areas, highs, lows, point of controls. We're looking at 2 specific things. Balances, which dictate where volume is heavy versus light, and the shape. So I'm not even going to be really touching on the value areas and what goes on with the value area highs and lows. So number 1, when we talk about balances, what is a balance? A balance of a prior session profile, any session profile, is going to be the area where there is a belly that comes into the market, right? This is going to be the general balance. Instead of looking at the value area, which is going to be this whole white part over here, I'm going to be splitting it up and taking a look at where volume is thick, realistically, where it pronounces a belly, and where it starts to thin out. So there are 2 aspects to this, right? When we're looking at balances, where is volume grouped together as in thick, right? Which means areas where there are distinct colors of blue and green in this profile, and where it pronounces a belly, as well as where volume thins out, which is this red area, right, where volume thins out. So if I take a look at this profile over here on the prior overnight, we can see that there are 2 general balances, and then there's thin spots of volume that expand throughout, right? If I look at this profile over here, I have just 1 spot of a balance and a general thinner area. Even this profile over here, I have 1 spot of a balance and a thinner area. This prior one, just a thick whole balance, very similar to the one that we have going on right now on the overnight. When I look at these areas, I'm trying to dictate where these balances are, right? Why is that important? Because when we're inside of a balanced area, what we have is the expectations for that balance to hold. So if I open prices up within this general balance area from yesterday's RTH, go from the ETH going into the RTH, the expectations for this balance realistically to hold, meaning that the bottom band of it, somewhere approximately 580, we can say, is the expectation for prices to sustain the current momentum of the market, which is the upside swing. So as long as 580 holds, the general idea is, can we continue the momentum to the upside swing, right? So just generally based on that, we already have our trade set up. We can use this 580 as a guidepost to try to hold the buy side on the day, right, on the first few tests. And if that fails, what happens is you have a very thin area of volume down here, which shows up down into about 500. So just using one individual level, we already have one trade set up on the day, right? A very, very simple strategy. So if I'm looking at this and we're within that balance, right, I'm going to be looking to buy the 580 to continue the upside move. If that would break at some point in the session, you've got another trade in your hands. Just like down here, in and around that 500 at the start of this balance, right, there are expectations for the buyers to try to hold that. Regardless of the session, we have a makeup of what's going on. So even if I look at this session here on the overnight, the general thought process is, okay, well, we've left behind an excess to the downside where we've created a balance over here between approximately 130 and the top band is approximately, we can say 230, right? So the general idea is if we're within this balance and we've moved up to make the balance in a higher price than the lows, as well as holding into it, that gives us bullish momentum to see if we can buy that balance low for the overnight to see that expansion, right? There is some resistance here naturally that we can play with, but the general idea is if we can break outside of that balance to continue the current momentum that's created the balance, we have that upside press. So if I look at the second part of this, right, the first part is identifying where the balances are, where the heavy volume is, and where the thin volume is. That gives us a very good understanding of what's going on. The second part is looking at the shapes of those volume profiles. The shapes of the prior ETH going into the RTH gives us a little more understanding of the directionality and the potential of the move. So there are a few general shapes that I've done a video on before, right? You have the standard D-shaped volume profile, which is this one over here, right? This D-shaped volume profile is just one thick, big balance. What happens from this scenario is that if you open within it, right, generally speaking, both sides of it have the expectation to hold support resistance where you can identify a trade, and the break, the expansion of that profile is going to dictate directionality, right? You have the lowercase b and the capital P, which are both general reversal profiles. You can see where their balances are. The idea is they have the expectation to hold the continuation of their move, meaning a lowercase b has the expectation to continue lower as long as the top of the balance holds, right? If you break outside, then you have the expansion higher. It's the same thing. The capital P, the directionality is bullish, so as long as the bottom band of that P holds, there is expectation for the buyer to hold out. If you break, that's where the reversal comes from. So if you take a look at what happens over here, right, with both of these profiles, once you break the balances, the expectation of the move is to the upside swing where you have a trend day. And then you have the double distribution, which is similar to what's going on here, right? The top band of the top of the B, the bottom band of the bottom of the B has expectations of holding support resistance and the midpoints as well. So you have this double distribution. A triple distribution, something that we see over here, very similar. What this triple distribution represents, right, something like this, is that the midpoint in the direction which is to the upside has the expectation to hold. So when we combine the understanding of balances, heavy volume, thin volume, and the shapes, we get a better understanding of what's going on. So for instance, if we look at how things shaped up on yesterday's price action perspective, we can say, okay, using this profile over here, I generally have one idea to start things off, right? Obviously, you might look at this as some kind of resistance, but I'm looking at the general direction of the trend. If the overnight session has moved to the upside, right, and you've created a balance into the current area that the price is trading, for example, in these highs, you pretty much have one shot for the continuation of the buy momentum, which is the bottom band of the balance, which happens to be around 580, right? If you can't continue the press and create a new trend day from there, that 580 turns into a pivot where you want to sell rallies into the next balance area, which has the potential to completely capitulate, right? A very, very simple, just one level use strategy that you can replicate on a day-to-day basis. If we take a look at the current overnight, if things close out like this, right, what happens in this scenario is that this spot over here, right, around that 520, 530, where the volume drops off, where you have the balance and you're inside of that balance, has the expectation to see if we can hold that continuation to the upside. If that fails, right, you don't really have too much under based on the overnight session. So if we take a look at how these things shape up, what happens is if we lose this 580 on yesterday's session, you have a drop down into about 520 or so, right? If you lose that 520, what happens, you have a drop down into this area over here, this 440. If you lose the 440, you have a very thin spot with the expectations to the downside. So if we take a look at what we had going on the day over here, you lose the 440 area, which is the lower band balance. You're looking for that downside move, right? And then we turn things around. But if we're just following the general process of what's going on here based on the current overnight session, if we lose a lot of these areas, you have the expectation that prices are going to roll over. So if we look at the beginning of it, right, just one simple idea to start things off. So if we ignore some of these levels, what we said is, okay, the bottom band of the current overnight bounce around 580, right? Bam, this is 580. So realistically, what happens from 580 is we catch a bid. Just one trade, that's all you need on the day, right? 580 rallies initially to 630, right? You have 50 points right there. 580 then rallies into 670 or so, right? So you have 90 points there. There you go, the day is done. If you lose the 580, right, even this 580 over here, it tries to grapple with 620, right? You can get another 40 points, but then you start losing structure. You lose the 580, what happens? You sell into the 580, and then things capitulate all the way down to 500 and then lower. So just one simple level, if you understand what the individual shape looks like from a balance perspective and the shape itself, 2 steps for a very simple trading strategy that you can use on a day-to-day basis. Just one individual volume profile needed. You cut all the middle stuff out and just go step by step by step. So if you guys thoroughly enjoyed this video with examples, hit that like button, hit that subscribe button, and we'll see you in the next one.